everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, August 22nd. Well, we had a clear reversal day yesterday. In front of me is the S&P 500 5-minute chart, just to kind of give you guys a handle of what had happened yesterday. We had a kind of a big jump up at the opening, and we rallied up a little bit for the first hour, and then we just tagged 1426, which we took out that 1422 high. I'll show that to you in the daily chart in a moment, and then we just clearly reverse course. And I mentioned that that once we get up to that area, settlers will definitely be able to step in, and sure enough, they did. It is a reversal day, clearly with volume. Is there something to be nervous about? One day doesn't make a trend, so we want to see what happens next going forward in the next couple of days. But clearly, the markets just cannot just grind higher and go up until you get to a key level. It just doesn't happen. I mean, markets just does not go straight up or straight down. They just pause, take breaks, and they either resume the trend or they reverse. In this case, this market clearly reversed yesterday. And I did say we're going to have there's a little bit more upside once you get to that, 6, 7, or 8 points previously to that previous high. The market's more is like a magnet. They usually run up there and then they clearly reverse, and that's exactly what we happened yesterday. Now, have we started our correction? Is there a market top? Well, you know what? We cannot say that yet, to be quite honest. A lot of people are calling, oh, this is the top. We're moving lower. We don't know that, and I wouldn't be so, plain bluntly just go out there and short the market. And we did short the market yesterday, and we're flat today. Only because that we don't know. We need the confirmation, and really today's confirmation would be taking out yesterday's low, and yesterday's low will come in right here in the S&P cash at around 1410. We take out 1410 and then that round lot figure number 1400. Then I say, yeah, we were looking for probably a small correction, maybe a 4 to 6% correction, and then probably be bought into. But Nothing is etched in stone. We don't know what's going to happen. Today's a big day. We have the FOMC statement coming out at 2 o'clock. That could be a total game changer, talking about QE3 or confirming an additional QE3. Then the markets are going to rip and probably run to the 1440 area, which would be the 2008 highs in the S&P. So we want to really use caution. Remember, guys, it is the end of the summer. A lot of big market players are not in, so that means there's less volume and more movement. So if something does happen, it'll be really to the extreme, so the market will move a little bit over and overshoot, any kind of long moves or any short moves lower. So we'll just keep that in mind, okay? But I do want to show you the spiders on the 5-minute. Look what happened. We had our big move up, gap up, and then we reverse reverse course here. And now we're back into this little channel, if you could see. So this is going to be key because this 1410, right, and that 141 really is the bottom of this channel, right in this area. So we want to look to see what happens what happens today. Now futures are down slightly overnight. I know Shanghai and Hang Seng really got smoked last night, so that's also not a good sign. China's also continuing to have problems, so we are again looking at that China trade that we're talking about probably the next couple of weeks or so. Remember, all eyes right now are on Europe, and once Europe gets settled in, and now Draghi speaking over the weekend mentioned something about keeping a cap on the yields, bond yields. So if that does happen, I think we're going to get a decent rally up to that 1440 area. So we really don't know what's happening right now, right? The charts are all over the map, and we want to just kind of play and see what we see and trade what we see. Trade the best setups, and that really kind of keep you out of trouble until at least this market has some sort of validity of where we're going. Are we moving higher or are we moving lower? And again, markets just can't grind higher for 8, 9, 10 days without a pullback. And this is just a pullback right now. So we want to see if the market tops are in. We're going to take out today's lows, close at the lows, or close somewhere near the lows today. And then I could say we probably have a 3-4 day move lower, and then reevaluate, okay? But let's get into our indicators. And as you can see, our NYMO, which really hasn't done much, again, if the market is going to sell off, has plenty of room to move lower, somewhere down at that overbought area of down here, which I'd like to see, okay? Or if the markets are going to continue to move higher, we have plenty of room on both sides. So that's really what it's saying right now. Markets are not overbought. No, markets are not oversold in any case at all. But we look at our VIX, and I want to talk about the VIX. We did have a little bump, a bunch up here. If you remember that we had this, get this up a little higher for you guys. If you remember, we had this area where our big support area here for the last several months. Now we had a big candle move up. And again, if the market does move higher, we can actually break down and go ahead lower again. So one day doesn't make a trend, but it's a good start. The VIX is starting to wake up a little bit. So that means that market participants are looking to buy some puts for some protection here, and there's a little bit of fear, staying a little bit of uncertainty, so to speak, okay? And now the put call gives you the same reading. Look at the put call. We had this bullish fallen wedge. We were down here yesterday morning, and we had a big spike up. So what that's telling me is that we're buying a lot of put buying in here yesterday. So markets are getting a little bit leery and saying, hey, you know what, we're too complacent here. Maybe it's time to either take some money off the table and or hedge our portfolio. And that's really what you guys should be doing. If you're long, if you have a decent-sized portfolio, long portfolio, no need to get rid of it if you feel like you don't want to, or if not taking profits, but definitely hedge your portfolio. Even if you're swinging and you want to keep you think that the overall trade is working, definitely I would be looking to buy some puts. They're cheap right now. Volatility is low. So that's something that I would consider. Now, if you look at the S&P 50-day moving average, we're getting at a little slightly, again, we're overbought here. We're way overbought. So that 50-day moving average, and we'd like to see this market come back down into this 25% area here, 25, 30, 35%, and then we could reevaluate. But this is all saying that the market needs a correction and the market needs to take a breather. Okay, now let's get into the charts and we'll talk about it. But really, again, like I said, nothing really much happened. But we did have our reversal candle here. This is the S&P 500. We tagged. We went up to 1426 on that 1422 high, and we clearly reversed. You could see, it's mainly to be expected. I had a funny feeling that that's going to happen, and it actually did happen yesterday. But you know what? We really didn't have such a huge move. I mean, we're down like 67 points in the Dow, but nothing really scary, if you know what I mean. So this is going to be interesting the next couple of days, and that FOMC statement is really going to add fuel to the fire to the downside if, in fact, the Fed does not say anything. So this all eyes on the Fed today, 2 o'clock, guys. That's going to be the big number today. Okay. So let's take a look at the charts. I want to just show you the spiders, and look with the spiders. This is what I've always been talking about. Market moves up for 8-9 straight days. Volume is extremely low. We have a big distribution day yesterday. Markets pop up to the downside, and we have our distribution volume. So you can see clearly, and you could go back anywhere in this area here, and you'll see volume is higher distribution day than any up day. So that is not good. That's not what you want to see. But this whole half of the year has been like that, and probably from the previous year and years. So this is not what you want to see. But look at we had a clear reversal, double top I've been mentioning yesterday's video, and we roll back down again. And this is the volume that we see. Okay, same thing here with the IWMs, double top in the IWMs. Look at the volume, big volume here. So, and usually, when you have these Russell 2000, which gauges risk, and you see risk comes off, and this is more speculative because these companies are smaller than the S&P 500. They're going to get rid of them first. So that's the first one to go out the door. So now, really, I like to see this 80, let's say 81, 80, 96, 80, 95. We take that out today, then I can say we're going to run back down to the 78, these averages in here. They got the 20 to 50 to 200. But again, constructive. This is healthy for the market to pull back if it wants to make another run, prior to the another move higher. Transportation sector, IYT, same thing. We had a big move up, and this really didn't. This held up pretty well, actually. So this is something that's not that bad. I mean, yesterday again, guys. Yesterday wasn't really much. We did have a little bit of reversal day, but today's going to be really important. And remember, I mentioned the Qs, the weekly double top in the Qs, and partly that's also in part of Apple. Apple again had a clear reversal. Google again, big cap tech. Leaders, a lot of people, a lot of market participants are now looking at what Apple does, and they have been, Apple and Google. But as you can see here, volume was light yesterday, so that's a good sign. Now, to confirm this double top, you want to take out yesterday's low of 67.73 in the Qs. If they take that out, then you're gonna see that market roll back down again today. So that's interesting to see. Here's the Apple chart. Again, Apple's gone parabolic again. That's $656. Right down into this area, 648 low. We'll see if we have any follow through with Apple. Look at the big distribution day we had yesterday. Again, this didn't help the market at all, along with Google itself. And last but not least, our Qs chart. Big volume in the Qs here. Okay, big volume in the daily chart. And as you can see here, we're up in this channel. And if we can just, let me get that right there. We ended right at the end of this channel, this long uptrend channel. Now, if we break the channel, then I can see it's at least testing the 20-day moving average in the Qs. Something to look forward to for today. And again, guys, not much is going to happen. Take a couple of small trades if you see it. But really, all eyes are going to be on the Fed. A lot of traders don't trade the Fed because it's really whippy. And, you can really get stopped out of a lot of trades because until this market digests itself, what the Fed is going to say in his minutes, then I think you get the initial follow-through tomorrow. So today will be really interesting to see what happens, all right? All right, guys, be safe out there, and we will talk to you tomorrow. Have a great day.